It's where the market changes its state of delivery, meaning that inside this shaded area, we want to see the price go up into it. Does it do it? Yes. And then once this candle's opening price, that is the beginning of these 3 consecutive candles, and I'm using all 3 because it's inside the area I told you to define as the reason to anticipate price going lower from the beginning, right? On the 13th of June, I said, we want to see signatures. That means evidence in price delivery, in price action itself. Does price show a willingness to treat this shaded area as resistance? Does it want to send price lower when it enters into it? Where? The low, midpoint, consequent encroachment, and the high. We don't want to see the high end of an old fair value gap if it's being treated as an inversion fair value gap. The better setups form if the high, if you're looking at it as a resistance or using it as the beginning point or inception of a sell side delivery or sell program, we don't want to see the high traded to. Treat that like the same thing I treat a breakaway gap, which is a fair value gap that won't completely fill in. If it gives you that signature, which is what we're seeing here, as soon as price breaks below the opening price here and leaves the shaded area that's in like a pale orange, once it does that, that qualifies that right there as a bearish order block. Why? Because the state of delivery changes from buy side delivery, then it crosses over the opening price there. Just because it crossed below an opening price of a series of up close candles doesn't make it an order block. The narrative behind where that order block resides, that is the imperative point that everybody is missing. That's why everybody has books and bullshit out there they want to call mentorships and courses talking about this is an order block. You have no idea. You're making shit up. You're making it up as you go. You're on the fly. You're looking at something in hindsight, trying to explain something. In this shaded area is what I told you to look at it on the 13th. And then we look for signatures inside that range. What does that mean? Well, you have an order block here. You also have a breaker. What? There's a breaker there. High, low, higher high. Consecutive down close candles. Same thing we're applying here. All these ranges here, push it forward in time. You're getting the same entry here. Stop above here. We're not trading the dollar index, but I'm trying to tell you that you can pick your own model, and every one of you can be trading differently using what I've taught, and you all can find profitability. You don't need the same entries. The entries are the least important thing. I'm going to say it again. Where you enter is the least important factor in consistency. It is any gap, whether it be liquidity void or inefficiency, or like I have it shaded here up here. They're measured from the highest high and the lowest low of that respective inefficiency or gap. And the midpoint is always referred to as consequent encroachment, meaning that as it starts to fill in and reprice to the high or low of these levels, as it encroaches, it's most likely to refer to the midpoint of the gap or inefficiency than the extreme high or the low. And that's the basis of why we like to see, if we're bearish, we want to see the upper end of the inefficiency or gap respected and treated as a premium and not be dug into. Meaning, as I mentioned before we took our break, we don't want to see the high end of any inefficiency be retraded to if we're bearish. If the market is really, in fact, in a sell model, the best ones, the strongest delivering obvious runners will always have this signature hallmark part to it where the upper portion of it doesn't get traded to. Look at the bodies of the candles. We have just a little bit of movement above it here, but look at these right there, right on that midpoint of that. You think that's random? When I talked about it on the 13th of June in that live stream, I said, I want to see, does this show signatures in price action that confirms, it suggests that my assumptions, by anticipating this level that's shaded in in a pale orange, that would be treated as resistance or a means of beginning short trades for smart money. And in targeting this level down here, which is the bullish order block on the daily chart. So in your mind, as a trader going forward, whenever I say things like that, or I say I'm looking at this as a premium array, I want to see it be treated as a resistance and enter a sell program, and I point to where I think it's going to go. Right away, in your mind, you start thinking, okay, he just told me where he believes with 30 years of experience where it's likely to go. So I just told you bias. They always say, well, the market priced it in. And I was mentioning that before we went into our break. So when I tell you where I think the market's going to react, okay, that's a key point of reference in either the market I'm talking about or a specific time frame. So we were working with the daily chart, which is where most of your decision making, for either a day trade, a short-term trade, or whatever, the bias is derived from the weekly chart and where it's likely to draw to. That's it. Then you're moving on to the daily chart. And the daily chart is you're watching and monitoring how each individual daily candle forms. If you're bearish, as we've been expecting since the 13th of this week, we want to see how does price gravitate to this level down here, which is that bullish order block. So each individual day, we have to weigh out, does it run into that shaded area up here, which is what I outlined this. We want to see, does the algorithm offer price there? And if it does, once it enters it, at what time of day? Well, what market are we looking at? Dollar. So primary interest is nailing down the high of the day. Where is the high of the day going to form in a market that is trading at a level we expect the price to react to? So we're expecting the inception of a down move between one of three levels in here, right? No. Midpoint or the low of that shaded area. Remember what I said. If we're bearish, every inefficiency, if we're going to use it as a basis or a framework for a trade, we want to see in a premium array that's going to be used to sell off and send price lower, we don't want the upper portion to be respected. Because if it doesn't get up there, like we're seeing right here, that's really indicating that this is going to be a strong probability. For what? The trade down to and through that order block.